dear students of class 12. Today this discussion is on the non-profit organizations. This particular chapter is supposed to be a little difficult for the students of class 12. But as far as Karnataka PU board syllabi is concerned, that there would be a guaranteed question for 12 marks on the question paper, along with a probable practical oriented question would also be given for 5 marks in the last section. So I would suggest the students to go through this lecture attentively and see to it that you are able to understand this chapter pretty well. We will have two parts of this lecture. Primarily in this discussion, that we will bring out the basic concepts of not-for-profit organization. So again, we will have one practical session where I will try to help you solve a practical question on the final accounts of NPO. Here we move on to learning the basic concepts of not-for-profit organizations. Not-for-profit organizations. These are the organizations that generally are established for the welfare of the society. They do not aim at making profits. They set up their organizations only for doing some public welfare. They work either as charitable institutions or as in the form of trusts. And here, their main aim is to provide service to the people at large. As we see here, the charity becomes their prime aim. There would be no intention for them to make any kind of profits. So when there are no profits over the transactions, obviously, there would be no big number of credit transactions. I would say that most of the transactions of a non-profit organization would happen in the form of cash transactions. So here, the books of accounts, as we have already learned in the case of trading, that there would be trading profit and loss accounts as well as balance sheet. So in the case of non-profit organizations, it would be a different set of books that would be maintained. The final accounts of a non-profit organization would comprise of receipts and payments account, income and expenditure account, and it would be a balance sheet. So here the receipts and payments account generally resemble the cash account because the receipts and payments account is prepared on the real account principle. Debit what comes in and credit what goes out. Income and expenditure account is based upon the nominal account principle, debit all expenses and losses, credit all incomes and gains. So it would depict the profit and loss account, and balance sheet would be in the similar lines to that of the balance sheet that is prepared for a trading organization. But then the contents of the non-profit organization would be a little different from that of the trading organizations. Usually sales, that is, the revenue from operations would be the major income for any trading organization. When it comes to an NPO, the incomes would be in the form of subscriptions, or it could be the donations, sometimes the grants and aid that would be received from the government, or at times the NPO would have invested its money, its surplus over any kind of investments which would fetch them interest. So here, the kind of items that you deal with in respect to either the incomes or the expenses, also in respect to the liabilities and the assets would differ majorly from that of the trading organization. Then a question arises in our minds as to why we should do the accounts for NPO when there is no requirement for us to find out the profit or loss, because it is not intentionally to make the profit or, these NPOs are established. So here, two probable reasons could be cited. One is that there should not be any embezzlement of funds, cheating, fraudulent activities. It should not be given a scope for these kinds of malpractices. That is the reason why the accounts of NPO needs to be maintained. And also it is a legal requirement that the accounts are to be maintained by the NPO. So here the statutory legal requirements also paves a way for the maintenance of these kinds of records for the non-profit organizations. Now we will have a quick discussion on the basic statements that just now I have named across. There are 3 statements that are being done over the final accounts of NPO. The receipts and payments account, the income and expenditure account, and the balance sheet. So primarily, let's begin with the receipts and payments account. The receipts and payments account is a summary of all the cash transactions. It includes both capital and the revenue items. So RNP account does not distinguish between the capital and revenue items. nor it does distinguish between the previous years and the current year or the future year. So any aspect that goes into the cash type, cash transaction, is recorded into the receipts and payments account. When you take income and expenditure account, this statement is prepared on the nominal account principle to find out whether the expenses exceed the incomes or the incomes exceed the expenses. Here, a distinction is observed between capital and revenue items, and income and expenditure account only records the revenue items. All the capital items are siphoned to the balance sheet. Also, make a note that income and expenditure account takes into account only the current year items, meaning it excludes the previous year and the future year items. Lastly, the balance sheet is prepared at the end of the year, and this will let us know the financial position of the NPO as on that given date. And here, generally, the items on the balance sheet, especially the liability side, we would name the capital as capital fund. When you recollect, for a sole proprietorship or a partnership, the capital is so called as capital only, which says about the investment into the business. When it comes to the joint stock company, we will call it a share capital. That you know that this capital is being shared by many shareholders at large, it would be called as share capital. Similarly, the capital would be called as capital fund in the case of NPO, because this comes as a charity money, which will not be returned to the investors. We don't call them as investors. These are the people who give money on charity. So that is the reason why we call this as capital fund. And at times on the liability side, we find special funds, which are meant for specific purposes. Could it be in the form of prize fund, or it could be tournament fund, depends upon as to the requirement of these funds. And when it comes to assets, not much of difference is observed. Here too, we find land, buildings, and it would not include machinery kind of thing, because no trading activities happens over here. You would find fixed deposits and investments more on the asset side. Now here, when it comes to the preparation on the receipts and payments account and income and expenditure account, before learning the procedure, it is much important that you need to be aware of a certain concepts, some peculiar items. So these items would let you understand better, say on which side and where the treatment would happen into the NPO. Let us begin with the first concept, subscriptions. What are subscriptions? Subscription is a membership fee. And generally, this membership fee is the fees that is collected by the NPO from its members on an annual basis. So we understand that subscriptions becomes the major income to any NPO. And here, this would be purely treated as a revenue item, revenue receipt, and subscriptions would figure out on the debit side of the receipts and payments account. Here, when you consider subscriptions as a revenue item, which would also follow the transaction being recorded on the income side, credit side of the income and expenditure account. But when you are recording the subscriptions into the income and expenditure account, care must be taken that only that particular year, the current year on which you are dealing with, should be recorded into the income and expenditure account. Next comes the term donations. What are donations? Donations are nothing but it's a kind of gift. Could it be in the form of cash, or it could be in the form of any property also. So any charity person gives you this kind of gift or property. So here this will appear on the receipt side. All this I'm talking about the receipts here. And donations could be categorized as specific donations and general donations. So here, when you're talking about specific donations, this money is meant for specific purposes. Say, for instance, if the charity person, the donor, we call him as, so if he is giving the money for any specific reason, for instance, he gives the money for building a particular part of the extension of the building, or could it be, say, in a college that he gives money on charity only to set up a particular lab and so on. So then we call it as specific donations. And when it comes to general donations, the purpose is not mentioned over here. So naturally that for any purpose that the NPO will be able to use this donations money. Now, when treatment happens, specific donations, whether they are small or large money-wise, should be treated compulsorily as a capital item, which means that specific donations always are moved into the balance sheet. General donations, generally, when the money happens to be small, relative, when I say small or big, it is always in the relative terms, that it would be shown as a revenue receipt, or otherwise general donations are also treated as a part of the capital receipt. The next terminology is all about legacies. This is a new word introduction which comes over this NPO chapter. It is the amount received as per the will of a deceased person. Before he dies, that he would have written against NPO a certain part of his property, which would get transferred to this NPO after the death of that particular person. So here what happens is, here also legacies form a part of your capital fund, because it comes as in the form of non-recurring item. So it would be treated as a capital item. Now, it could also be specific legacy or general legacy also. As such, class 12 does not distinguish much on these kinds of legacies. So it would be treated as a capital item, which would appear in the balance sheet on the liabilities side. Next is the life membership fees. So here what happens is, as I have put in across earlier, subscriptions refer to the membership fees. Some people would admire giving the entire money for their lifetime as in the form of membership fees, that they would remain the members of that NPO up to their lifetime. So this money which is collected by the NPO is to be called as life membership fees. So here when it is said life membership fees, it is non-recurring because a person pays it only once in his lifetime, and necessarily they should be treated as a capital receipt. It would be credited also to the capital fund, added back to the capital fund on the liability side of the balance sheet. This is again a new term introduction, entrance fees. Entrance fees, also referred to as admission fee. Generally what happens is, when a person becomes a member, that he may have to pay this entrance fees. Now there is a great debate still happening, I should say, on whether entrance fees has to be treated as a revenue item or as a capital item. Because people who believe that it's a capital item say that they only pay once when they take up their membership. And many a number of times others advocate that this is being paid by different people at large at different times, so why not treat it as a revenue? So as far as our examination orientation is concerned, if the question is silent about as to what treatment happens to be given on this entrance fees, students, you would treat it as a revenue item, meaning that it figures out in the income and expenditure account. But in case if there are specific instructions on how to treat this entrance fees, go accordingly to the instruction. Sometimes half of the entrance fees could be capitalized and the other half could also be treated as revenue. Now, this is an important discussion, the sale of an asset. Do we call it as an old asset or an asset? So we will bring out both the parts of the sale of the asset, how it needs to be treated. Now here, whenever you are discussing on the selling portion of the asset, you should always remember that there would be the cost, depreciation, and the sale value. I come again with these aspects. The cost represents the money which happened to be used to buy this asset. So we put it as cost of the asset. Let us call it as cost of the asset. So cost of the asset minus the depreciation till the date of the usage, this will give you the book value of the asset. The total cost of the asset minus the depreciation gives us the book value of the asset. Now, this book value of the asset should be compared with the sale value. You need to compare the book value of the asset with that of the sale value. If the sale value is higher to the book value, the difference has to be considered as a profit. Sale value minus book value will tell us about the profit on the sale of the asset. It gives you the profit on the sale of the asset. On the other hand, if the book value is higher to that of the sale value, it represents the loss on the sale. You should be able to understand this properly. Now, when it comes to treatment, the profit will be profit portion. Only the profit portion will be credited to the income and expenditure account. This will be treated as a revenue item and it should be credited to the income and expenditure account. So in case if there happens to be a loss on the sale of the asset, obviously on the income and expenditure account, it would be debited. Now, when it comes to the balance sheet, also the treatment extends over here. So on the asset side, when you are denoting the asset over whichever asset we are talking about, say the total value, that is the book value of the asset, should be subtracted because this happens to be sold. So the book value of the asset will be subtracted and the rest of the money will be shown on the asset side of the balance sheet. So this is how the sale of an asset will be dealt across. And in case if you are selling the asset, the scrap, meaning that the asset which has no book value at all, at times it is given that, say, the sale of an old asset, say it could be for a for instance, let us take the sports club as an example for NPO. So there are some old balls which are not being used. So sale of an old asset. Now, when you're talking about sale of an old asset, the book value remains zero. So whatever the sale value that happens, suppose you're selling it for 500 rupees, let's imagine, this entire 500 rupees will be considered as profit. Here, in this case, in this example, this profit will be taken to the income and expenditure account on the credit side. And in the balance sheet, no indication will be there because anyway, the asset is zero here. So we are not going to lose any asset as such. So that is why there will be no representation being done on the balance sheet. So this distinction has to be clearly observed, students, whether you are selling an asset with the book value or the book value being zero, that you are going to sell your asset. So an indication in the question will generally be given to you. So go according to what happens to be given in your question. Now, as we continue with our discussion over here, so we will take another issue for our discussion, sale of periodicals. So periodicals, it is generally like magazines and newspapers and such other things being brought by the NPO, many a number of times that this would be sold, that is as a scrap item. So this is a regular feature of NPO. Being recurring in nature, this will be treated as a revenue receipt. Now, this is a new term again, honorarium. What is honorarium? At times, the NPO would request some of, say, the external person to come and help this NPO. That will be on an honorary basis. For instance, if it is a college, that guest lecture could be arranged, or if it is a sports club, some kind of coaching by an expert could be arranged. So if the person who is willing to help this NPO comes and does the job, no kind of fees will be paid. If it is like on a paid basis, then we may have to reward that person. But since it is like on an honorary basis, but NPO keeps the routine of gifting a certain money, at least for the commutation purpose or for honoring their services. So this would be considered as the payment of honorarium. Since it is a regular feature, it would be considered as a revenue expense, only as a revenue expense. Endowment fund. This fund is as a result of a gift. Now, there is a small difference between the legacy and endowment fund. Usually, endowment fund is always specific in nature. The purpose for the endowment fund given by the donor is specifically mentioned. So here it would appear on the liability side, and endowment fund also many times is given when the person is alive. Legacy is under the will of the person, of the deceased person. When it comes to endowment fund, it would be given during the survival period also. So that is the reason why it would be treated as a capital item on the liability side of the balance sheet. Next, under NPO, many times the government would bring in a certain aid to these kinds of welfare seeking organizations. So that money that comes from the government to the NPO for their help, it is called as government grants, especially when you take the schools, colleges, public hospitals, and all these charity institutions. The government comes forward to help this NPO in the form of a certain aid. Now here, if this aid is recurring in nature, that is, if it is continuously being given at periodical intervals, you can treat this as a revenue receipt. On the other hand, if a major portion has been allotted, for instance, a building, in order to have an extension of the building, that the government is giving, sanctioning a huge money to the NPO. In such a case, this will be taken as a capital income. It depends upon the purpose and the intervals in which the government grants is received by the NPO. Now we will conclude the session by a particular topic, special funds. What are these special funds and how do we go in the treatment of these special funds? Usually, these special funds are meant for meeting a specific purpose. For instance, if you are talking about prize fund, say generally the organizations would mention this as prize fund. So this prize fund is constituted for giving away the prizes for the students. A certain money will be kept across in this fund, and the interest that it fetches on this investment would be used for the distribution of the prizes. Similarly, they can maintain tournament fund. They can also maintain building fund. It depends upon the nature of how that, match fund can be maintained. Like this, whatever that the expenses in respect to it, so the money will be taken from this fund, which will be exclusively maintained by NPO. Now, how do you treat these items? Usually, any fund is a liability. It will be treated as a liability, which will happen on the liability side of the balance sheet. But when it comes to expenses, suppose prize expenses, now you should be able to sort out from the question given to you whether prize fund is there or not. Suppose prize fund is there, then these price expenses will also be treated as a capital expense. Why? Because this price expenses will be deducted from the prize fund. On the other hand, if the prize fund is not being maintained, then this will be treated in the ordinary course as a revenue expense, which will figure out in the income and expenditure account. Same is the case with any fund maintenance. For instance, I repeat here as an example once again to make it understandable. Tournament fund. If tournament fund is present, if it is given as per the question, then you will treat tournament expenses as a capital expense, because it would be deducted, the tournament expenses money will be deducted from the tournament fund, which will appear on the liability side of the balance sheet. On the other hand, if the NPO does not maintain this tournament fund, then this tournament expenses being given in your question will be treated as a revenue expense, and it will figure out on the debit side of the income and expenditure account. So I have given you a small discussion and insight into the non-profit organizations. So we will try to continue this learning with some examples on the working of receipts and payments account and the income and expenditure account, followed by the balance sheet. So once you are more versatile with the terminologies that are being used under NPO, it becomes quite easy for you to work on an essay type question based on this chapter. So hope you have listened to me attentively. Listen to this lecture repeatedly and ensure that you understand all the aspects that have been dealt over this lecture. Thank you for that beautiful listening. Have a wonderful day ahead.